Good morning, guys. Welcome in. How is everybody doing? Welcome in. It is Monday. It is a not so beautiful Monday in New York, but I hope it is as nice where you guys are. Welcome in. Welcome, welcome. How is everybody doing? What an insane Friday session. DB, thank you, DB. 8:35 in the morning, DB, thank you. Much appreciated. That is very, very kind of you, DB. Hopefully it's coming out of some gains from perhaps Friday session. Thank you, DB. Putting my phone on DND for a minute, and we are going to have a beautiful pre-market session. So first of all, Burmy Trader, thank you. Thank you always, Burmy Trader. Much appreciated as well. I am feeling better this morning. Still a little bit under the weather, but better than before, which is good. I was sick for like a week. I feel like I was sick since Monday, Tuesday. But I am like 90% better this morning. Anyway, what a Friday. If Friday was, Friday was the medication I needed, I think. This was the downside move that I think we were all preparing for a while, perhaps for too long. Friday session took a long time to come, and I'm happy it did come in because I was able to get out. I was able to profit take on a lot of my shorts. Okay, that was the first thing. Was we knew yesterday, or rather on Friday session, last trading session, that this was coming in eventually, and it did come in yesterday. It did come in on Friday, and it was really nice. If you capitalized on it, if you got some gains on this, congratulations. That was probably the best down. It was the best downside move in perhaps 6 or 8 weeks, right? So very aggressive move. Market moved down lower into some key demands, and we are now gapping up after some news. So we'll talk a little bit about what's going on in terms of the news side, right? What's going on with the not too much politics, but we'll go over a little bit about what to expect going into our Monday morning. And the hint is it's going to be a lot of perhaps headline news, right? So a lot of things coming out, right? Trump tweeting this and then and China saying that, and so obviously things are going to be kind of it's going to be a tug of war today. So let's see what happens going into this week. But we have some major levels to contend with today, right? So obviously SPY broke down under 665.50, it broke down under 660, it broke down under 655, and then it even closed yesterday in the after hour session. It closed yesterday at what, 652, but it pushed a low of 646 on the S&P chart, which was an insane move on Friday. So we were positioned short on this. If you guys were in the swing trade for a long time, you probably got some profit on this. This was probably the best short on our Friday morning. We were also in Apple right before the sell-off. I sold all my 0DD. I'll show you. Want to see something funny? I sold all my 0DD on Apple. I got an Apple there. I sold all my 0DD and Apple right there. I did not hold my 0DD, but I did hold my next week contracts. I got moved into there, and that was my day on Apple on Friday. This was a short that we had talked about and discussed in the pre-market on Friday. It was a trade that we were in on live trading on Friday session as well, and it worked out nicely, right? This was, sometimes the market will give you these little bits and pieces, right? And this was the little gift that the market gave us on Friday. Granted, was this a technical sell, right? The answer is not really, right? It was a little bit of a technical sell to start, but then the market just took wind, right? A big gust of wind came by, and we just happened to have a very big sailboat with a very nice I can't think of the word here, but we had a very big sailboat, and we were ready for the wind to come in, right? But the wind came in on Friday, and the question is, where is the wind today? What is going to happen today's session? And we are going to talk about it going into our beautiful Monday morning, right? We have some things to discuss this morning. One of the biggest things I'm watching is Apple. Apple actually bouncing off a major demand here. So the question is, what do we do here? Major demand below, major supply above. We'll go over Amazon. I like for longs. Amazon 221 is a big level. 218 also a very big level. We're going to go over Nvidia. Nvidia obviously not really doing too much, right? We saw some downside on our Friday morning, but we have now basically bought up all that downside after all of this aggressive move down, and we're now at the key supply again, 190. So the question is, what do we do here at 190? We're gonna go over AMD, we're gonna go over Avgo, we're gonna go over the SMH, we'll go over what's going on here in the SMH chart. We have a lot of stuff to go over here on this Monday morning. So without further ado, I want to talk about this quickly. First things first is earnings reports. We are beginning the earnings season. We always start the earnings season with banks, and we have begun the earnings season. So just keep that in mind. You're now going to see us begin to talk more about these earnings reports almost every single day. So be aware of that going into our week ahead of us, right? This week is not so big, but next week it becomes bigger and bigger and bigger, right? The one thing I always say this is, you typically kick off the earnings season for tech when TSM and Netflix report earnings together. Now, where the hell is Netflix? Because I'm not seeing Netflix on the calendar here. Usually, I think I've almost always seen Netflix and TSM report the same day. So I don't know what the heck's going on, but my OCD is killing me about this right now because I don't know what is going on here with Netflix. When is Netflix reporting earnings? Because I'm curious to see. When is Netflix reporting earnings? So they are reporting. Did they have it even listed here? I don't even see it listed. Did they already report? Because I don't even see. Oh, it is. It's over here. So Netflix reporting on the 21st. So yeah, so Netflix is a little bit further out, but I would say that we are still beginning the earnings season. Okay, so earnings season is still beginning. We're starting off the earnings season on Tuesday's session, really, with BlackRock, JPM, GS, Citigroup, Wells Fargo, Johnson & Johnson. So there's some big names reporting on tomorrow's session on the bank side. And of course, you guys know this is going to impact your SPY the most. Then on Wednesday, ASML, Progressive, UAL, GB Hunt. And then on Thursday in the pre-market, we have TSM, KeyBank. Should be Netflix, but no Netflix here, obviously. And then next week it gets even more spicy. So the next few weeks in a row, we are going to have spicy names reporting almost every single morning. So it's going to be an interesting earnings season, and I'm excited for it. I'm really excited for it. Okay. On the econ docket for this week, it is incredibly important that we must all be aware of the data on Thursday session. It's Wednesday and Thursday, I believe. Where is the data? Where is this? Where is said data? Where is the aforementioned data here? Because there was big data scheduled for Wednesday and Thursday, but I'm not seeing it. We PPI found demand. I believe we also had big data, but I'm not seeing it. So hold on a second. Today's Monday the 13th. Nothing today. Nothing Tuesday. Nothing Wednesday. And then on Thursday, there was, correct me if I'm wrong, but I believe we were supposed to see CPI and PPI data here. I thought we were supposed to see CPI and PPI data on our Wednesday, Thursday session, but I'm not seeing it scheduled here on the docket. Maybe they removed it for the what's it called? For the government shutdown, but they shouldn't do that. I think I'm right about this. Now, don't quote me here, but I believe we were supposed to see CPI and PPI data this week. Okay, I believe we were supposed to. I'm not sure, but even if it's a government shutdown, oh, it was moved. Okay, it was moved. Interesting. So they moved it to the 24th. Okay, all right, fine. That's crazy. Fuck it, might as well, right? Just insane. Just push it off next week. Anyway, whatever. Supposed to be big data. I was excited for the big data because big data means big volatility. Big volatility means big money. But hey, whatever. Throw it to next week. Fine. That's fine. We still have earnings reports, so it is what it is. Okay. So let's move on. Let's go to our SPY chart. Let's discuss what's going on here on the SPY chart. First of all, we have 1,000 people here pre-market. 1,000 people here pre-market with 263 likes. That is really bad. It's the one thing I ask for, guys, is like count 500, right? That should be a minimum, please. 500 like count. So, all right, SPY chart. On the SPY chart, on our Friday session, basically it was just a supply rejection, right? So supply rejection came in, and I'll tell you this, technicals, look, I know a lot of technical traders, right? I'm a technical trader myself. I trade off technicals. But there are traders who are coming in and saying, look at the sell-off on Friday. This was a sell-off that was, the inverse fair value gap, technical reversion back to key demand. No, okay? This was bullshit, okay? That what happened on Friday was a pure news sell-off. Now, as far as technicals go, technicals encompass about this much yesterday. I would say probably about this much here. This is the technical sell-off we saw on Friday. That's what it was, right? So you saw basically a push above supply. Excuse me. Wow. You can still hear my cough there, right? But it sounds worse than it actually is. I'm not that sick anymore. Anyway, so 673, big push above supply, fell back below our supply zone, okay? And then we sold off. Now the question is, why did we do all of this? Okay? If you live under a rock, I'll explain it very quickly. Basically, US and Trump fighting. That's what it is, right? No politics here. United States and China. What did I say? United States and China fighting, right? So that's what's happening here. Okay, we had some tweets from Truth Social, right? That was what kind of started the downside move, and Trump said some pretty crazy things, and we were like, "Wow, what's going on here? Maybe the tariff war is ramping up even more," and the market sold off for that reason. Now, what's going on in the pre-market is you had some news yesterday on Sunday around 4 or 5 p.m. in the afternoon yesterday, Eastern Standard Time, where Trump announced, hey, maybe we will actually come to the table. Maybe there will be some sort of agreement drawn together, and we're not going to be as kind of difficult to deal with, right? So that's what's going on here, right? So some aggressive downside after news, and aggressive upside after some news. Now, where do all the technicals line up now? So that's what happened, right? So we saw some downside on Friday. We had some news on Sunday, okay? And now we are back at 661. So what we need to do first is jump to the 1 hour time frame. And on the 1 hour time frame, you're going to see here that we basically gave up in 1 day of price action. We gave up how many days worth of upside grind? Well, just do the math here, right? So you can see from about Wednesday, the 10th of September, you can see here, I would even go back to maybe even the 8th of September to where we were right before the sell-off on Friday. 32 days. 32 days of upside grind in the market. And this was given up by 1 day's worth of aggressive sell. Okay, 32 days of upside grind, 1 day of sell-off. Now, where did we move into? Well, on our Friday session, you saw us break beneath below 669. You saw us break beneath below 665.50. You saw us break below 663. You saw us push into the FOMC highs. You saw us push below 655. And you saw us push below FOMC lows, 652. Remember the FOMC highs and lows. This is the most important level I have today's session. The Wednesday, September 17 highs, and the Wednesday, September 17 lows. That is 659.50 to 660. That is also 652 on this bar chart. So FOMC highs, FOMC lows. Now we broke beneath both these levels on Friday. You saw break below 1, and then a sell-off into level 2, right? FOMC highs, FOMC lows. Now today, here on the Monday morning session, we are actually above the FOMC highs. This is a very important level this morning, okay? I think that if we are above this level here on the SPY chart, you should see us probably push into a key supply for the next leg down. But if you are analyzing this, you can't really go into the market today's session like a rhino and want to short everything because we are just moving down on Friday, right? That's not what you should be doing today. The idea this morning after a big sell-off on Friday is to look to see where does that lower high present. And the lower high for me, I think is going to present either at 663, which is the pre-market high, or it's going to present here at 666.50, which again would be the next level to watch out for. So these are the two things I'm watching for today's session. Lower high here or lower high there. That's what it is today's session. Now, in no world am I going to be shorting back into the FOMC highs because FOMC highs, FOMC highs, FOMC highs is a big iron level. Okay, this is an iron level. I don't want to be shorting back into an iron level. If it can break below 660, then I think we can trend back lower into 655 and below. Because why? Because that's the FOMC trade, right? So I think that one of the easiest tradings is going to be, that makes no sense. One of the easiest ways to trade is trading between these Wednesday's highs and lows. If we can break beneath the Wednesday's highs, we should go to Wednesday's lows, right? So again, 660 breaks, downside back into 652 and change. So if we see us break under 660, downside, but as of right now, we are holding a very critical demand zone going into our Friday morning. So what should we be looking for? We should be looking to see where does that lower high present, okay? Yes, absolutely, I'm gonna hydrate. I know I sound bad today, guys, but I'm really not that bad. It's just my voice a little bit. Okay, so again, on the ES chart, I'll slow down here. I'll make it slow because I don't want to push my voice too much. On the ES chart, what you should be watching here today is going to be 6,700 ES. This is the most important thing. I'm not going to repeat everything I just said here on the SPY chart to ES because it's the same thing. But the pre-market highs and the FOMC highs is 6,700 ES. Go back to this over here. You see the Wednesday's highs over here, the zone between 6,680 and 6,700 ES. Well, that's your supply this morning. Okay, so if we can fail that today, that's your short. The lower high formation on the ES chart is right in front of us. It's this right here. This is the first level I'm watching. If we can fail 6,700 today, that's your optimal short today. That's option number one. Option number two is going to be, do we do this? We hold above it, and we see us move back into 67.43, which is my second opportunity for a short. And it's my top watch today here on the ES chart. Shorts over here or shorts over there, top watch. If we fail back below, you know we're going back into 66.10, which is the FOMC lows here on that. You can see the September 17 lows. That is the most important level for demand today. Do not short back into FOMC lows. You saw it hold up on Friday. You saw it hold up on days and days before. So be careful shorting back into 6610 today here in ES chart. But again, my top watch is going to be looking to see where that lower high forms, because if it does form at one of these levels, either at the 67.43 or even at the 6,700 level, I'm looking for shorts right there. That's really what it is. My top watch this morning is going to be actually 6,700, because if we can fail this today after early morning, off a little bit of maybe a pop and fade today like this, that's your best watch for shorts today. So high conviction level here, 6700. If we're above this level, you know where we're going to, back into there. Okay, so that's what it is today's session here on the ES chart. Okay, moving on. Let's go over to Qs. On the QQQ chart, what should we be watching today here in Qs? Well, the first thing is look at what happened here on the Qs chart. We moved back into the FOMC. Why does this maniac keep talking about the FOMC from last month? Like, why am I talking about the September FOMC levels? The reason why is because it's so important, right? These are such high volume levels. Look at the volume on the chart here. Just look at the volume on the bottom of my chart here. I'll make my face smaller so we can all see it, right? Like make just like right there, bam. So look at the volume here. You're gonna see the volume is the highest on what days? It is the highest on Friday, and it is the highest on Wednesday, right? Why is it so high on Wednesday? FOMC, right? Big high node area. So if I'm watching for anything today, I'm spending a lot of time reviewing what happened here on Wednesday and the highs and lows that Wednesday. And look where we bounced on Friday. It does not surprise me that we bounced somewhere ballpark around the FOMC lows. Now this morning, my top watch of a lot of levels here is remove some stuff, right? Make it simple. What's so simple to me this morning now is we are actually well above the FOMC highs, right? On the Qs chart, we are well above it. And my demand this morning is going to be 590. In fact, if we sell off today here in Qs, I would argue that one of the best trades today here in tech is going to be a reversion trade, a bounce trade here at 590. So if we do sell off there today, be cautious of that being a demand zone going into our Friday morning or Monday morning. Okay. But the question really is, where does a lower high form here on tech? On the tech side, I know there are a lot of levels here. That's the first thing I'm going to say is usually I make it so my levels are far and few, right? Not too many of them, but this morning we have a lot of them. And I think that there's nothing we can really do here, right? These levels are all very important to me. If I'm watching for anything here on the tech side though, I'm looking to see can 605 turn and reject, which is a big supply zone. 605 is a big supply. Or I'm looking to see, can we turn this 602 in a supply, which is also the pre-market highs. So 602 and 605 are my two big levels, my two most important levels going into my Monday morning. 605 as my first reject spot, and 602 as my second reject spot. Okay, that's all it is today here on tech. Again, I don't really love the QQQ chart today. I think if you want the most clarity, look at ES. Look how clear this ES chart is. This ES chart is super clear, and notice that there aren't so many levels here, right? And I don't like it when my honestly, I don't like it when my chart looks like this. When my chart looks like this, it's just too much going on. I have too many levels to trade off of, and too many different ideas here. So I'm going to focus today mostly on the ES, on the SPY, because that to me gives me the most clarity going into my week ahead of us, right? So again, 6,700 ES, then 6,743 as my two big levels here on the ES and SPY chart, okay? That being said, let's move on. I want to go over some other names. Let's talk about the first ticker, the first set of tickers. The first one you guys probably know what it's going to be. It's going to be Apple, okay? So Apple was our short on Friday. Now, I no longer have shorts open on Apple. I'm going to tell you why we should be careful of shorting Apple today. The reason why is because if you notice this chart and notice where it pulled into on Friday's session, you're going to see something so incredibly insane. Look at what happened. This was actually perhaps the best long opportunity on Friday. And sometimes, even for myself, we get all caught up with the downside. You see downside candles like this in the market, right? You see downside, you see downside, you see downside like that. And it's hard to go long at these key demand zones. But notice where Apple bounced on Friday. This was the best possible long entry on Friday. And I remember we said at some point, if you go back to one of the live streams from probably almost a month ago, we said at some point, Apple is going to pull back to what level? Apple is going to pull back to 240. And it is always at the moments that are least that you least expect, right? It's always the moments that nobody's trading. It's always the moments where there's so much volatility, right? So much chaos in the markets, where these are the trades that you often miss because there's so much going on, but they're obviously the best, right? Look at what happened here on Apple. The 240 pullback long happened. Again, if you don't believe me, go back to the live streams from a month ago, right? You're going to see me talk about this almost every single day. I was like, guys, we got to see the pullback here at some point. If it does, that's your best possible long spot. Even myself, I said it for weeks and I didn't even take this trade, right? I took the short. I was short over here at 656 on Apple, and I got some downside back sub 253, even into 250, but I did not take the 240 demand bounce. Now, this morning here in Apple, Apple is doing perhaps the biggest break and retest long ever, right? This was the previous highs here, set of highs here, and we broke out. We pulled back to it on Friday, and we perfectly retested this level for a long opportunity at this demand zone right there. Where is this going to? In my eyes right now, the next level Apple is going to is 253, right? It's going to go to 253. At some point, maybe today, maybe tomorrow, it should go to 253. Okay, that's a supply zone though. In order for us to see more upside, we need to see us break above it, right? I would argue we probably see a first reaction downside off this level, but then the second or third reaction should be an upside break and a move higher. So if the market does flip strong, you can watch 253 breakout, right? First, I would watch the failure because it is still supply. I would actually trade it myself. I would trade the 253 rejection for shorts. But if we break and hold above 253, this is going to be a beautiful upside trade. So again, kind of flip-flopping here, right? Saying this is a bull chart, it is a bull chart, but I would actually watch the first tap of this level for a failure. Then the second tap or third tap, I would look for a breakout move, because if we do clear 253, we are going to rip to 259 plus. So keep this in mind, right? There is a bear thesis, there is a bull thesis. The first tap of 253 for shorts, but if we clear back above it, I'm looking for longs, sky high, and a 259 plus, because Apple is a name that I think will rip. Why? Because it is holding 240 as key demand. Again, don't quote me here, right? But this is what I'm seeing on the Apple chart, okay? Moving on, Amazon. On the Amazon chart, this is the chart that is also holding key demand. If you notice something here on Amazon, I was long before the aggressive sell-off. Now, granted, I did sell some on Friday. I sold some on Friday morning, or I think I sold on Thursday afternoon. I can't remember when I sold this, but I sold it on either Thursday or Friday. And then I had a lot of positions still left on this going into the Friday downside. I ended up selling it around this green line right there. So I got out at the green line, luckily, because it did sell off all the way into 211. But if you notice something here in Apple, or in Amazon rather, notice that Amazon didn't really sell off with the overall market as much as other names did, right? Notice this, right? Look at the Amazon chart for a second. Look at the lows of Thursday, the lows of Wednesday, the lows of Friday, Monday the 6th. Sorry, Monday the 6th. You're gonna see what? We have a triple bottom low here, and we're actually above it in pre-market. Then you compare that to a name like Tesla. And Tesla, you can see that Tesla is actually kind of looks very similar, right? I would argue Tesla looks very similar. Tesla actually in the same boat here. Tesla not selling off with the overall market as much as other names are. Let's compare it. Go to AMD, right? AMD also maintaining pretty strong too. But Nvidia, I mean, actually a lot of these tech names are bouncing back. This is something that's interesting because I was going to say that Amazon was holding better than our names, but it's really not. It really is just matching the overall tech sector. You do have some tech names maintaining. It's Amazon maintaining. It's Nvidia maintaining. Nvidia is actually above its Friday the 3rd, above the October 7 lows. It's actually above it, right? So some names still maintaining. But going back to Amazon for a second, on the Amazon chart, everything that Amazon does today is going to be guided by 218. If we are above 218, we're bullish. If we're below 218, we're bearish, right? So right now you can see we have some triple bottom lows here, 1, 2, 3. We are holding right now, but the question mark today's session is going to be, do we maintain here, right? If we can maintain here at 218, then we probably go higher. And my trade, where I would get involved in this chart now, is going to be back above the pre-market highs. If we can build back above 221, I'm looking for a long side move back in highs. So my trade is going to be right there. If I'm above 221, I'm looking for longs back into 225. Yeah, percent-wise, Wall trades is very good. Sometimes what I'll do here in pre-market is I'll show you guys names that are relatively outperforming the market. And this morning, I was going to say Amazon is relatively outperforming, but I was wrong about that, right? It's not really true because if you go to other names are also kind of moving in tandem, right? So scratch what I said there. But what I will say is above 221 for longs, back into 225. And obviously above 225, this is a beautiful long trade and then move higher. I'm not really watching shorts here on Amazon. Mostly watching for longs on Amazon today because I still like the fact that it's holding structure and it's holding these triple bottom lows. 1, 2, 3. As long as we're holding these set of lows here, I think this can still give us a long side trade going into our Monday morning, right? But see what happens here. Obviously, again, we have to see what the appetite is for the market today, but this is still holding key demand, right? Moving on, Nvidia. So Nvidia actually also maintaining levels here, right? And you can see that if you run a fib retracement here, you're going to see that this chart is probably somewhere around the midpoint of our retracement, right? It's actually at the 61.8% retracement here on Nvidia. So right now we are at supply on this chart. Obviously, this is a key supply zone. 190 is our key supply here. But I think the most critical thing to understand here is, I mean, it really is just 190, right? Are we above 190? If so, bullish. Are we below 190? If so, bearish. So even though it's a Monday morning and we don't exactly know what the bias is yet, I would say set an alert here at 190. Because if you see us start to base above 190 today, then you could go long on Nvidia with a stop loss under 190 and look for the upside to move back in 195. If you see the market flip very aggressively weak today and you see us doing this today here on Nvidia, then maybe that's your downside play back at 183. So everything that happens on Nvidia, just like Amazon, right? Just like Amazon, I was saying 218 and then 221 is your level. I would use one level on Nvidia, 190. If we're above it, bullish. If we're below it, bearish. And you know where we're going to, right? If we hold 190, we're going there. If we lose 190, which we are right now pre-market, then we're going back into the lows of our Friday session the demand of our Friday session around 183. So it's either going to be here or there, but the question is, where's our temperature gauge? The temperature gauge is simply just 190, right? AMD. On the AMD chart, you can see, again, actually holding pretty well. AMD is a name that is still very much so bullish. Even though the market sold off on Friday, AMD holding very bullish. That is crazy. I'm looking at the chat. Anthony Brown, I just looked at the chat and I just say, I have no money to trade. That just caught me very off guard. I realize you're talking about cash accounts. Yes, if you have a cash account, then it's probably not going to clear today because of the market holiday, the bank holiday. The market's open, but the banks are closed. So on AMD, I'm still watching for reclaims and demand bounces. AMD is a name that is actually outperforming in a way that makes sense to go long at levels. So if I see us clear to 27, look for longs back in highs, or if I see us pull back to demand here, watching 200 and also watching 187. Remember I said something on Apple. I said Apple was that 240 level, right? Apple was all guided by 240. I'll tell you something on AMD. The equivalent of AMD's level is 186 to 187. At some point in time, we're all going to be twirling our thumbs. We're going to be out to eat. We're going to be down the block doing something, right? And then all of a sudden, AMD is going to do this. Bam, bam. It's going to happen. I think it will, right? It's going to be when no one's expecting it. It's going to be a major retest level. It's going to be the level of all levels. If you want to catch this trade, probably set an alert here at 186, 187, right? I think it will happen at some point. In the meantime, though, I'm scalping here for longs. I'm scalping here for longs. And I'm also waiting for the 187 major retest level. If it does happen at some point, that would be a major long spot going into our demand zone here, right? 187, major retest level, okay? Moving on. Moving on. Tesla. On the Tesla chart. So I was going to make this really cool comparison between tech names that Amazon was stronger, but obviously you could see, look at Tesla. Tesla, same thing, right? Tesla actually also pretty strong here. Look at the triple bottom low here. You have a low here, and a low here, right? Low, low, low. We were at the channel low here, demand on Tesla. As long as we're holding this 416 here on Tesla, this is still a demand test and perhaps a channel play back in the highs. So this is what I'm seeing here. If we're above 416, be careful of going short there, right? Because right now we're sitting at almost the exact channel high. If we're under 416, then sure, downside back into the lows of Friday, and then possibly even back into these lows over here and there. But as of right now, we are maintaining. So as long as we're maintaining 416, this is key demand. Where are we going to? Probably back into supply. Look for the supply rejections, 445 for supply rejections. But on Tesla, similar to other names, it is maintaining, right? And we are sitting at support this morning. So let's be careful of that going into our Friday morning, right? And again, I think that, the question is, why is Tesla holding so well? I mean, it's just because it's just in a channel, right? Tesla's been ping-ponging out the highs and lows and highs and lows and highs and lows for a while. And as of right now, it's still just ping-ponging off the lows. Okay, Avgo ripping higher here. It must be some sort of news on Avgo. I assume news. Broadcom surges on OpenAI custom AI chip deal. Okay, so big news on Avgo in the pre-market session. But where are we going to now? So doing a reset here on Avgo, you're going to see that we had a beautiful high presented here at what is this? 373 and change. 373 and change. So you can see high produced here, 373. That is the all-time high, I believe, right? That is the all-time high here on Avgo. And then we have demand below us around 355. And then also at 350. I would watch for two things on this chart here in Avgo. I would watch for demand bounce number 1 at 355 or demand bounce number 2 here at 350. This is obviously a big news on Avgo and obviously moving higher off the news. So look to see if we can look for a demand bounce here at demand zone 1 or demand zone 2. If you're a fib trader is probably going crazy this morning on this chart. But if you're a fib trader, you're watching this today. Your top watch is going to be this 350 to 348 demand bounce. And I like that a lot, right? If we do pull back here, this is your high conviction zone, is 348 to 3. Assuming this news is real, I don't know what's going on here, but that's what I'd be watching from a tactical standpoint, right? I'd be looking for longs over here, 350, 348 for a top watch for longs, or 355 for a secondary watch. Guys, look, I went slower today. I didn't go over everything, but I appreciate you guys all joining in. Thank you for all being here. And thank you for all bearing with the audio issues. I know my voice probably sounds horrible, but thank you for all hanging out. And I'll see you guys all for live trading. Have a happy and safe trading session. I'll see you guys all there. Bye, guys.